Good morning, traders. Welcome to another analysis by Swen Labs. Before we begin, stay until the end because there will be a multiple choice quiz based on today's breakdown so you can test your understanding of the market structure. Now let's talk about what happened in the market. Gold experienced a very aggressive move during the Asia session, falling roughly 3% and pushing strongly to the downside. This move is significant because price swept through major sell-side liquidities, taking out large number of stops below the previous lows and tapping multiple sell-side liquidities. When the market clears that much liquidity in a short period of time, it often signals one of two things. Either the market is repricing aggressively or it is clearing liquidity before a potential reaction. Another important observation is that during this move lower, two sell-side inefficiencies formed on the 1-hour time frame. These imbalances suggest that price moved very quickly without much trading activity in between, which means the market may eventually revisit these zones to rebalance. So today we need to focus on whether price continues the displacement or begins correction on the inefficiencies created during the drop. So let us break the market down step by step. The first step, as usual, is to mark the previous day high and the previous day low. We use the magnet for precise marking. This is your PDH level at 176.63 and this is your PDL level at 5096.5. These levels define the most recent daily liquidity range. Yesterday's low or Friday's low was particularly important because it represented sell-side liquidity. With today's Asia session move, that liquidity has already been taken out. When sell-side liquidity is swept, two scenarios usually appear. Price continues lower with strong displacement or price reverses after the liquidity grab. The key difference between these two outcomes is momentum and structure after the sweep. We now focus on the daily time frame. We can see that there is an old sell side imbalance which is still holding. The market has tapped it. Large directional moves like today's often leave higher time frame inefficiencies or voids. If the market is now approaching a higher time frame support area or a prior imbalance, we may start to see reactive buying pressure. However, if there is still significant imbalance below current price, the market could continue pushing lower to fill that space. The daily chart gives us the broader perspective that prevents overtrading small intraday movements. And we can also see that there is a BC here, which the market has been supporting. This is a buy side imbalance. We now move on to 4-hour. 4-hour has created a sell side imbalance, a fresh sell side imbalance. After a large Asia session displacement like this, we look carefully for 4-hour inefficiencies and voids. These zones tend to act as future magnets for price because the market refers to these levels when it trades after liquidity is balanced. If price begins retracement into the 4-hour imbalance, which it has, we need to observe the reaction. A strong rejection could signal continuation. But if price starts filling the void slowly, that may indicate a shift towards consolidation or a continuation reversal. You can see that the market has reacted here though we will have to watch further. We now zoom into the 1 hour time frame. Today's sell-off created two clear sell-side inefficiencies on the way down. These imbalances being here CB stands for sell-side imbalance, buy-side inefficiency, and another CB here. These imbalances show the move was very fast and aggressive. The market rarely moves in straight lines forever. Eventually, they tend to revisit imbalances to rebalance liquidity. This means that even in a bearish environment, short-term retracements are possible. So if price begins moving upwards, these inefficiencies can act as magnets where price fills the imbalance before deciding the next direction. The key is watching how price behaves when it reaches these zones. Does it reject and continue down, or does it fill the imbalance and stabilize? The next important step is to analyze yesterday's volume profile. We now mark the volume profile which we can find here. The day of Friday started on Thursday at 1800 hours and it ended at 1600 hours. Right? This is the previous day. You can see the previous day's value area low. So the value area low and the value area high is the range between which there was maximum trading activity. These are the extreme levels, and the point of control is where the maximum volume activity happened, the previous day POC. The POC represents the price where the most trading activity occurred during the previous session. In many cases, when the market moves aggressively away from value, it may rotate backward towards the POC to rebalance. If price begins retracing upward after today's sell-off, the POC could become a natural magnet for price. You can see that the market has already moved to the previous day's POC. But if the market now moves away from the value without returning to POC, that signals a strong directional conviction to the upside. But you can see that the market is rotating around the previous day POC. We now mark the current day's POC. The current day's POC will be a running POC. The day started at 1800 hours. This is the current day's levels. We now mark the key psychological levels. You can see the extremes at 176, though we count 175, 5175 as a whole number, and 5063 is the PDL, and we consider 5050 as the whole number on this side. So we're talking 5050 and 5175 being extreme levels. Round numbers play a major role in gold trading because they attract both retail sellers and institutional liquidity. These levels often act as areas where stop losses accumulate, breakout traders enter positions, institutions engineer liquidity. After a strong sell-off, psychological levels below the market can act as targets, while levels above can act as retracement resistance. So if the market begins retracing, watch how price behaves when they approach these levels. Strong rejection could indicate continuation of the bearish trend. While we can see that the market has closed above previous day POC and made a bullish move up. So in essence, gold has already experienced a major Asia session displacement of roughly 3%. During this move, sell-side liquidity was swept. You can see that the previous day's value area low, the previous day's PDL has already been swept. Because of this, today's price action will likely focus on one of two behaviors. Scenario 1, the market continues the bearish displacement and searches for new liquidities lower. Scenario 2, price begins retracing to fill inefficiencies created during the sell-off before deciding the next direction. The key is not predicting the move, the key is observing how price reacts at imbalance levels and liquidity levels. In closing, after a major displacement move, traders often make the mistake of chasing price. This is where many traders get trapped. Instead, wait for liquidity sweeps and then a clear displacement, retracement into inefficiencies, and confirmations before entering. Patience is what separates disciplined traders from emotional traders, and that is your key to profit. So today's key focus is understanding the aftermath of the 3% Asia sell-off. Watch how price reacts around the 1 hour inefficiencies created during the drop. Then look at previous volume profile levels and nearby psychological levels. Trade patiently, trade with structure, and avoid chasing price. I'll see you in tomorrow's analysis.